Good morning, traders. It is Wednesday, May 28th. Hopefully everyone's having a good morning. Looking at equities today, the markets are slightly mixed. We are seeing the Dow and the Russell slightly negative. We have the S&P 500 and the NASDAQ slightly positive. NASDAQ up the most, Russell down the most. So today's not so much a broad market rally. It's more so, I think, a tech-driven rally. We have NVIDIA coming out with earnings today. If we take a look at the Mag 7 as a whole, they have a very strong chart pattern. Tight bull flag starting to threaten to break out here. We could see an expansion move. I think a lot of it's going to play NVIDIA is going to play a big role in what happens. But overall, Magnificent 7, definitely money flowing into those. We can see NVIDIA had a rally up on the 30-minute chart. Over the last couple of sessions, it's dipped into short-term oversold territory. And then now it's starting to pick up speed for this next leg higher. So it is showing fairly substantial potential move that will drag the indices sharply higher. Tesla was a big mover yesterday. It had already broken out, or has broken out and moved higher. You can see here oversold territory on the 30-minute chart as well. Pretty much all the markets were doing that. Even if we go to the S&P 500, I think we dipped into oversold territory 2 sessions there, probably on the NASDAQ as well if we look at the QQQ. And this was all what we talked about back over here, where we saw this giant close up at a 10 level, talking about that when the market closes at a 10 level, which it did right here, we tend to see the market have a flush out low over the next 1 to 3 days, meaning it moves lower and shakes everybody out, and then the market puts in a very significant standout low, meaning it could be something like this. When you look back several weeks later, you're like, wow, that was a standout low. And so that's what we've seen. We've seen the market have this exhaustion move. It gapped sharply lower. People panicked. It pushed deeper into oversold territory, and then boom, the market takes off the other way. And yesterday we had FOMO buying. But when the bars are green, we want FOMO buying. FOMO buying means people are piling in, chasing prices, driving the market higher. What really stands out for us is when the bars are green, when we are in an uptrend, are the panic selling. That tells us we are getting to a short-term pivot low or a more extensive standout pivot low when it's at a bigger extreme. So let's take a look over at NVIDIA real quick. I'm not sure if we actually looked at it yet. NVIDIA, here, another type bull flag. They pretty much all have this pattern. It could be right back up into this 150 range very, very quickly. So we'll just have to see how the earnings go. Obviously, the market, you never know how it's going to react to earnings. They could meet earnings, beat earnings, and the price sells off. A lot of times it's buy the rumor, sell the news. So people anticipating good numbers, and the good numbers come and people take profits. The markets are so backwards in terms of how you naturally think they move, which is why most people lose their shirts or struggle. The more you trade, the more you lose, because you're just always on the wrong side of how the market actually perceives and has already bought into news. Good news is usually sold into because we're already expecting it, and investors bought into that news in anticipation. If we take a look at where else money's going today, we do have bonds. They're relatively flat today. They did have a pretty strong rebound. We definitely have a big bout of volume here, so lots of interest in moving parts here in the bond market with interest rates. It has kind of popped right up into a resistance zone. If I just drop a line across here, we've got consolidation. We've got another consolidation. We kind of got a pivot low. We got a whole bunch of high volume spikes. Here we got lots of volume traded through here. So it is definitely stuck under a pivot zone. We'll see if we can get more traction and have a bit of a bounce. But again, it's still in a downtrend, still pointing to potentially lower pricing going forward. Let's take a look at a couple of other questions that people had. Let's take a look at platinum, platinum here. Somebody wanted to know about platinum, saying it had broken out and had started a big move. Now this is the ETF around it, but it moves the same as platinum. I don't know what the future symbol is off the top of my head. I just kind of pulled this up, saw this comment, but it did have a big pop and move with some pretty big volume. But in the grand scheme of things, if you just zoom back on the chart, it is still, to me, in a stage 1 basing formation. It is volatile. It is just at the upper end of its range. Typically, when we get emails about something and people have FOMO and they say it's breaking out, it's running, this is usually when people buy into it. Obviously, you can see the volume too. Usually it means it's going to struggle a little bit. If we zoom back on the chart even further, you can see this range and this noise just gets even bigger. And let's just keep going back here. Let's see how far back it goes. This is a massive noisy range, and you can see pretty much every time it's got up into this level, we have seen platinum fall fairly significantly. It's fallen 17%. I mean, pretty much each time of here is about 17 to, or more percent. So I'm not too excited about it. To me, this is, if you're in this and it actually popped and you've ridden this move up, it's probably a pretty good time to take money off the table and wait for another drop and for a price to get slammed back down. But this is a stage one. This is what we don't want to be part of. Something that's chopping around sideways with lots of volatility. You pretty much, if you're in this waiting, trying to pick a bottom, even if you nailed the bottom, you're still, 1, 2, 3, you're still 3 or 4 years and it still hasn't even broken out yet. So it's a lot of wasted money, and usually platinum doesn't really pay much of a dividend, so it is really just costing you money to sit in a dead investment. You're best to wait until something is clearly in an uptrend, pay a higher price, but it's going to start growing right away for you. And that is our whole strategy with the stage analysis that I always talk about. Obviously, stage analysis, we could argue platinum is still in a late stage 4, so a bottoming phase, or a stage 1. It's still trying to figure out a bottom. So we just got to let that kind of pass. Eventually, there'll be a time where it's in a stage 2. That's when you want to jump in, is when it's going to consistently be going up, not trading sideways, range bound for several years. Another person had a question about URA. We did close out our URA, ETF URA. We got in, had a really nice move. Let's just take a look at this chart here. If we take a look at URA, it's had a pretty nice move from our entry price. It's popped up. We ended up getting out the other day on this big move up, but it has continued to push even further. Some people are having some FOMO, saying, why did we get out? It's still running. And the reason we got out is because we are in a stage 3, in my opinion, based on analysis. In a stage 3, when we hit our targets, we want to get out. A lot of times things don't keep running. If this does and keeps on running, well, it sometimes just happens, and you just have to let it go. It's not about trying to make making sure you nail every trade. You'll never nail every trade, and you never know when it's going to roll over. So in a stage 3, when we hit our first, second, and third target, we are then out. We've locked in 20% on the last portion of it, which is a pretty good trade. Actually, more than that, because I think it gapped above it potentially. But overall, we just have to let it go. Again, the markets could roll over at any point. We've hit our targets, and that was a nice kind of third base hit, hitting our third target. And that's kind of where we're at. If we zoom out on it, you can see here we are right back up into resistance. And just as I mentioned with platinum, right when people start wondering, why are we getting out? This is so strong. Let's stay in it. What's going on? You start to get questioned and challenged, even with a good winning trade. You'll notice we're up into resistance. We're at a level where we have seen uranium stocks fall 30% or more. Obviously, the more recent one has been a huge decline in price. So again, if you are trying, or you expect to catch every big move in the market and you want every flashy, shiny thing, then this is not for you. I'm here to make us money consistently, not try to squeeze every nickel out of the market. And and for people to get upset if we don't get it. So that's where we're at. We're about making money, not gambling money, and we have proper expectations to protect and grow in a very controlled environment, which most of you know is the way to go. And usually the people who understand what we're doing here have been through the ringer. They understand, hey, let's protect our capital and let's grow it as much as we possibly can without extending our risk. People value consistency. People value protection, and that's who I'm focusing on. So let's take a look at oil real quick. Crude oil up 1.25%. It's kind of just building a bull flag here, or trying to figure out what it's going to do. The trend is still down, so it's nothing too significant, nothing standing out. Let's take a look at the energy stocks. Energy stocks, they are trying to figure themselves out again. In a perfect world, the stock market does push higher. We could see this push a little bit higher, deeper into resistance. I'd love to see this kind of push up somewhere back up to this level, or just build a bearish pattern. If the stock market itself starts to roll over and gives a sell signal, we could buy an inverse ETF on this space. I do believe the energy sector here eventually will fall off a cliff and pick up speed fairly dramatically. We could see this drop, $20 a share. Percentage wise, it's 25%. If you use a 2x ETF, that's 50%. So there's a lot of potential for this to unwind. And of course, if we did go into a bigger recession, this will go even further and generate a whole lot more return. But again, one step at a time. When we look at the overall stock market and the trades, we stepped out of the market. We avoided the market chaos and crash. We collected interest. Our accounts continued to grow through this phase while everyone lost their shirts temporarily, or did lose their shirts if they ended up panicking out during these days, which is what we watched and saw happen. Now we've got a new trend. We've hit our first target in here, and now we're up about 7%. And the markets are trying to push. This is the QQQ. They're on. If NVIDIA and we have good tech earnings, we could see this push up and potentially hit our next target about 10% to the upside. And this market might kick into a short-term little bull market and suck people back in, get everyone very bullish. And that'll happen just before the stock market potentially rolls over and sells off. When we look at the hot list, all of the most aggressive stocks and sectors, most of them are up here in the top performing space here. This is our hot list. And typically when everyone's piling into the most aggressive stuff, that's usually just before the market goes off a cliff and sells off. Everybody gets confident, they put their money to work, they believe in the market, and then the market pulls the rug out from underneath them, and they end up buying high and then eventually panic and sell low in several weeks or months, when we have another one of those washout type of lows where people just hit the breaking point and we see a big panic sell off. Like we saw back, let me just go back over here, like we saw back in, right over here, back in March, this type of washout low where everyone totally flipped the script and got out. So that's what we're waiting for. Anyways, that is it for now. We'll see how the markets unfold. Right now, we're just kind of riding this trend higher. And again, no matter what we think or feel the markets are going to do, we follow price. So I may be bearish, but we're still long the markets when they give us a technical trade setup. That is what we're doing. And if you can't follow the price action and you just follow what you think or feel or want to hear, which unfortunately a lot of people do, you're going to be on the wrong side of the market and everything is going to frustrate you. And we've noticed this even with a bunch of members here. People didn't want to get into the last trade. They're too scared. And it's always the trades you're too scared to take are generally the ones that work out. The market has a great way of pushing you to the brink and for you to be like, I'm going to pass on this. I'm not feeling it. I'm too scared. Those are generally the best trades that unfold. So the harder it is to get into a trade, the better the opportunity is, because most people are scared and the market goes in the opposite direction of what you expect. A good example of this is some trades we had back in 2023. If we take a look, we had a nice winning trade, but overall the market started to roll over. We ended up having a trigger here, and we took a loss in the market. The market sold off. We took a 4.5% loss. Now this was on just less than half of our portfolio. So overall, it didn't do a ton of damage. Again, very controlled though. We didn't want to hold as the market sold off and went to something very uncomfortable, but we did take a loss on a portion of our portfolio. Now, investors and traders started to get very nervous. We got another trigger and people didn't want to get into it. They were very fearful. And then what happens? We end up having the market rally up. We hit a target, we hit a 2 target, we hit 3 targets. Big move in the market that dragged out, and eventually the market reset and went on from there. So we had these targets. Here we had another trigger to get in. We hit another target right off the hop here. Within a couple weeks, we hit first target, ended up running up even further, but eventually ended up closing the rest out over here for still a significant gain on our trade. But this is what happens. You take a small loss or two, throws you off. You start to question what's going on. The trend has been going down. Although this is telling us the trend has actually changed direction and the momentum has shifted. Now, sometimes the markets fail to follow through. But what happens is you end up missing some of the best trades, which push our accounts to new all-time highs. And I believe that's kind of where we're at right now. We've got people nervous about the market, and they don't want to get into the market because they're scared. And here the market is ripping higher and continuing to push up. Even though we're bearish, or I'm bearish, we are long the markets, and you have to follow price, not what you think or feel is going to happen. And that is the differentiator between a successful and an unsuccessful trader and investor. Invest in what's working and don't trade off emotions and news, and just manage your positions and risk. Anyways, that's it for now. We'll talk to you soon. Bye-bye.